Hello, everyone, and welcome to your Onchain update for the 23rd of November. Now, it's a pretty chaotic world out there. There's all these rumblings of, various firms blowing up and DCG's in trouble and Genesis is in trouble. And yes, all these things are pretty nasty. So I'm not going to lie and say that we kind of know how this is all going to play out and whether full capitulation is in play. But what I do want to explore today is what a capitulation may look like and whether it happens to look like pretty much exactly the market structure that's in front of us. Just in case this happens to be the bottom in the capitulation, I can then pin my hat and say, look, I called it. Anyway, I'm not going to kid myself there. I just want to give you a very, very kind of real assessment of what I'm seeing and essentially the scale of the damage. And when I look at all things considered, I mean, we did dunk down to 15.5K, but I mean, FTX is big news. I think we all know this. It probably, even me, right? There was a moment there where I was like, "Oh man, this is slightly nastier and bigger than I was expecting." Um, and when I think about it, we were hovering around 18K, 19K for a long time, and the bottom of that range was 17.5. So to get 2K below that on some news that is potentially industry handicapping, if you believe the absolute crook Suzu or Kyle Davies, I forget which one of these clowns was posting about it, but I saw a Bloomberg thing. For some reason, these guys from 3 Arrows are on Bloomberg. I mean, please, this industry needs to grow up. Anyway, one of their quotes was that this is going to set back the industry by a decade. Now, a decade ago, we were in 2012, and Bitcoin was $3. That's a little bit different to 16,500 or pushing up to about 16.8 at the time of recording. So I'm not entirely convinced about this whole we've set the industry back one decade type business, especially not from a man who scammed people out of many, many billions of dollars. In fact, I don't particularly care what that guy has to say. So anyway, what I want to look at is capitulation in full color, because as far as I'm concerned, I'm looking at one. It's nasty, it's big, it's angry, it's the end of the world, Bitcoin is dead, crypto is over. Although I think that latter sentence could be more correct than not. There's certainly big chunks of it that I think are over. Nevertheless, what I'm looking at in front of me looks like a textbook capitulation. It's a big one, it's a nasty one, and let's have a look at it in all of its glory detail. So we're going to explore this from a few different angles, but because I have access to the Glassnode Professional Suite, what we're looking at here is called the Engine Room. This is essentially for metrics that for a variety of reasons, we actually can't even plug into our Glassnode Suite, whether it's graphical or the data is too heavy. There's all sorts of reasons. Too hard to present, but nevertheless, let's run through these things. So these are metrics that we essentially only have available for pros. Now, what I'm looking at here is the URPD. You've seen us talk about this before. This is essentially of all the unspent coins, what is the price when they last transacted? Now, we've looked at this a number of times, and you've heard me say the same two things over and over again for the last couple of months. The first one was that look at all these blue coins, long-term holder supply. Now, we traded down to 15,500, and this guy up here is hovering just below 68K. This guy here's got a $60,000 PTC. There's me with 55. There's all sorts of folks up there that just, I mean, they're not selling. They're just not selling, right? It's just not going to happen. And if they were going to sell, here's the opportunity. Get out while you can. The other one I want to highlight is look at all these short-term holder coins. These were coins that were accumulated during our recent range, and there's a fat chunk of them still there. Now, we're also seeing a bunch of coins moving down in these lower levels here. Now, what these coins are, this is the capitulation. There's no question, and we've talked about this. There's been some whales distributing. There's been some shaking of long-term holder status. But all of these things are small on a percentage scale. They're big in terms of 80,000 BTC suddenly coming from long-term holders and, whales depositing a couple of thousand coins here and there. It's all nasty stuff in the short term, but it's a fraction of a percent of what they hold. So that doesn't to me look like just sell the farm, it's all over, Bitcoin to zero, right? What we're seeing is selective capitulation, and this is kind of expected. It's also important to note that we're getting into the end of the year, so I think that there's going to be some tax loss harvesting around the world. There'll be some elements of all this as well. And again, I want to kind of write off how damaging this last couple of weeks has been. There's no question it's been pretty nasty. We all know that. But what I'm also seeing is that this chart hasn't changed much, right? It hasn't changed enough to be like, right, so Bitcoin's going to zero because all these coins from 50 and 40 and 30 and 10, a full-scale Bitcoin's going to zero is that this cluster here is absolutely enormous and price is actually probably lower. And I just don't really see that, or at least I remain personally unconvinced that that is what's going on here. We can probably skip through some of these. The other one I want to look at here is the realized cap by age bands. This is the entity adjusted version. And what we can really see, if we just look at this orange bar here, right, this Bitcoin orange one, that's coins that are younger than 3 months. So if we draw a line across here, we are so far below all-time lows, it's unbelievable. This is the smallest, even after we've had this uptick in coins that got spent. So older coins from up here got spent to become young. Even with that said, maybe 2015 at the very, very bottom of the bear had a smaller amount of wealth held in those younger coins. So again, there's been spending. These things have happened. It's just a factual reality. But man, it really just doesn't look like I mean, look at this here. When you see these massive peaks up of all this activity, this is what you start to get when you're getting actual true distribution, right? We saw it back here, and I think it was about December 3rd, if I remember correctly. This phase here was a huge spike up of these hotter colors, right? We obviously get it during bull markets, but generally speaking, during capitulation style events, we get an uptick in these things. And we've seen a small one, but man, it's nothing to write home about. So it really doesn't feel like something that the market can't recover from. It doesn't really feel like Bitcoiners have had their conviction changed. So now moving into the capitulation side of the equation. So this is profit and loss return bands, which kind of makes sense. You can obviously see that red is bad, or at least loss is being realized, and green is not. What you can see is that this wick here is pretty significant, right? It compares to many of these massive capitulation wicks we had through the 2018 bear. This is an enormous capitulation. This sell-off after the, that was a 50% down. And the difference here is that this isn't a 50% down, right? This is $3,000 or 2,000, depending on where you want to measure it from. It's kind of most of the length of March 2020. We obviously still need to see if this fills out and has a bit of volume to it, or if it's more of an event. But you can see it stands out as a significant event, and compares really only to some of the biggest capitulation events we've seen in Bitcoin history. Now, this is the full market, right? We're looking at all of the coins that are moving around. This one here we're looking at is long-term holders. Now, long-term holders well and truly above. And by the way, these are in percentage terms, both of these, percent of market cap. So we're actually not considering dollars here, so we can compare between cycles. And as you can see, the wick on this thing here, there's one that's worse here, 2, 3. It's essentially the third worst wick that we've ever seen in terms of losses realized by long-term holders. So the coins that were spent got smoked. Now, this is a good sign. Having the flush out of everybody. Now, I think this cycle is quite interesting because of its length spent, and I mean duration and time there. The amount of time we spent up here was much larger than previously. This one here, we had the top and then we kind of collapsed down into this triangle. This one here, we spent a year and a half, right, hovering around up in this 30,000 plus range. So there's a stack of accumulation and people who bought the top here who are now getting flushed out down here at 40, 50, 60, 70% discounts, right, to what they initially purchased it at. So this cycle is a little bit different in that there's a lot of time held up in this zone. And we'll look at a couple of charts in a second that really highlight that. Now, I mentioned before those red bars on the URPD. This is where this one becomes very interesting. On the short-term holder basis, notice how much smaller this capitulation wick is. Now, this is generally a good sign. Why? Because those short-term holders that we saw, let me just scroll all the way back up for completeness. These coins here, right, up above 19, 18K that are red, these are coins that were accumulated within the last 5 months and are in that range. As you can see, pretty much everything above that price range is now long-term holder status. So 5 months ago pretty much captures the entire range. These guys should have capitulated out. That's what we normally see. We normally see guys who just bought, panic sell, and get me the hell out of here. In fact, that's what happened up here at 30K. We had all of these coins. You can actually see these gray bars. They're exchanges. They're kind of the remnants of where people were accumulating back before Do Kwon decided to pull his maneuver. And a bunch of those coins, you can see how small this is. They actually capitulated down to this level. Now, what you can see in this chart is that we haven't seen anywhere near. This is what that looks like, that massive flush out of 30 to 40K down to 20K, right? That's what this capitulation is. This one here is nothing like it. We just haven't seen those folks do it. And what that tells me, and we've talked about this a fair bit, those short-term holders who stepped in there at the 20K, 19K range, They ain't short-term holders. They just happen to have bought their coins recently. Folks who are buying down here are legit. They ain't going anywhere. They understand what's going on. There's obviously the forced sellers, right? That's always the overhang, the miners, the DCGs. Let's not ignore that. However, folks who are stepping in and putting cash on the table right now are hardcore. They're not selling their coins unless you give them a damn good price for it. And I bet you that price isn't 12K. So what I'm seeing here is that that cohort that recently accumulated, they're just not the ones who are flushed out. And that I think is a good sign. The fact there's a huge mass of those red coins still up there, I think it actually bodes quite well, right? It's starting to look a lot like a capitulation to me. It's kind of that final wick that convinces everybody that it's over. And just to really sum that up, so this chart here is the spent volume age bands by P&L. Really what we care about here, this is looking at coins that were spent in different age brackets and basically how much of it realized a profit or a loss. Now, there's kind of two ways you can view this. This is looking at the point of spend. And the thing that's really interesting here, here's our 2 to 3 year band. Some of the guys who held their coins for 2 to 3 years took an L. They took an L, right? You held your coins for 2 to 3 years and you still lost. For 3 to 5 years. Some of these guys who bought their coins 3 years ago, right, got minced. It's wild. Imagine holding your coins that long. In fact, there's good examples of this here, this band here, right? These 2 to 3 years and even these 3 to 5s. These are people who essentially bought the top, held through the entire bear market, and then sold pretty much at break even or took a little bit of an L as we broke up in 2020. This one here is then plotting it out by where those coins were actually acquired. So you can see here 2 to 3 years. Folks who bought the top here essentially held it for 2 to 3 years and then capitulated over here in 2020 or in 2019, right? It's tough. Some of these folks, I mean, here you go, 3 to 5 years. These ones here, people who held these coins, bought during this 2019 run, they're capitulating out now and taking an L. Imagine holding your coins for this entire duration and still losing. It's just painful, right? But that's what you want to see. You want to see absolute maximum pain. And this is someone holding it for an entire cycle and still losing. I mean, I say this with a smile on my face. It's brutal. Now, this chart is really, really interesting. What I want to highlight here is kind of two things. One, I think we can all see something change when FTX blew up. Every single cohort is essentially moved from a distributive behavior into a accumulation style behavior, which is kind of wild. The other thing I want to highlight is there was 2 other periods where this happened. So remember, this doesn't mean that the bottom is going in, but what it does mean, this cohort here, following the lunar collapse, same thing, right? Following the $20,000 visit, same thing. Something changes when price changes, and that's human psychology. You see these flush outs and human behavior patterns completely change, right? So we start to see that all of these cohorts start stacking sats following these major capitulations. They're starting to see immense value, and this is a good sign. This is essentially what you want to see, and this thing here is massive, right? Pretty much all cohorts are currently in the accumulation state. So and this is recent, right? This is only in the last couple of days, particularly on the larger whale cohort. They've only just decided to turn things back on. I'm not mad at what I'm seeing. I'm not going to lie. So the last ones I want to look at, these ones are just pure art. I just love these charts. These are fantastic. And the more I stare at them, and I'll put these in the newsletter today so you can have a poke around on them, but the more that I stare at these, the more signal that I find. So let's just explore some of the ideas. What this is looking at is essentially where's the coin supply, and the intensity of these bars basically show like how solid these bars are, shows you where the coins are. And it's essentially modeling out what age they are in different buckets. So what we can see down here are Satoshi's coins and old miner coins, right? 10 years old, down here at these very, very small. In fact, Satoshi's coins are below that. These are all post-Satoshi coins. So you can actually see the HODL waves baked in behind these things. Now, there's a couple of things that stand out. And really what I care about here is the bull market into the bear market and then the reversal back out of it, because that's what obviously we care about. Now, you can see bull market tops clear as day. Why? Because you get enormous concentrations of hot coins. 2017, as we broke the all-time high, look at it go. People just start spreading out coins all through the market high, right? And you get this bulge, right? This red bulge here is people selling the top. Here it is here in 2013. There it is in our first market cycle. There's the end of the bull, right? as we sold off. The next thing you see is this kind of decay down. And note that we kind of form this capitulation floor. We start to form a capitulation floor, and then we move into things start to go green and yellow. This is where the hodlers now have held their coins for 1 to 2 years. So you get this kind of flow of orange, and then it starts to turn green as we come out of the bear. So you can see here's that flood of coins at the bull. We see it flood down. We're still in that very, very orange phase. But notice the bottom that we just recently had. We'll zoom in on this in a second. But you can see there's a lot of orange in around this zone. This is accumulation. These are those short-term holder coins. Here it is down here in 2018. Here it is in 2015. Here it is in 2012. So as I said before, the previous zone that we were in, back up there at the 19K region, that was a textbook market bottom. I would have not been surprised if we rallied from there. This feels like what, my trading mentor Doc has told me is kind of the undercut. You get that like final flush out where people go, oh man, it's just over. But then it recovers, right? And again, I don't know if we're going to just bounce back up into it, but I'll tell you what, if we get back up into that 19K range, starting to feel like it could be a true bottom. You get that nice undercut, scares everyone, tells everyone it's going back to zero, and then it just doesn't. And it just doesn't die. And that would just piss everybody off. Everyone who wants Bitcoin to go to zero would be so mad, and I'm so here for it. So this one here is then zooming in on that particular zone. We're looking at only up to about 5 years old or 7 years old down the bottom here. But you can see the massive clustering of these hotter coins that we can see, right? And note that these bars, what matters here is you want to see these bars stay nice and dense. Change color. You want them to grade up the stack because they're getting older. But you can actually see here where they start to grade out, and they grade out of this color. This means that those coins are still held in that particular zone, right? So these coins that were accumulated here have aged all the way to be, 3 to 5, 5 to 7. They're getting older, right? These coins. Now, what you can see is that these are still very, very dense, and we have a lot of growing warmer colors down the bottom, but nothing like what we had down here. So to me, what this is actually showing is that we have an enormous amount of accumulation that's happened in previous, call it consolidation ranges, and yet we just aren't seeing the capitulation out, which really gives me a lot of confidence that we have a market full of hodlers. There's no question some of them are panicking out, but I like what I see. It has a lot of similarities. You can see the similarity between this bottom that we just had and this one over here, and those coins are just not moving. I kind of like it. I like the supply and demand dynamics of this thing. I like the fact that we didn't really punch that low in terms of price percentage. Following news that FTX blew up and DCG is in trouble, and the industry's going back a decade. Well, then why isn't price going back a decade? I'm not seeing it. So anyway, look, it's crazy market, but I just am seeing supply dynamics that I'm a big fan of. It just doesn't really, to me, feel like that this isn't some kind of a low. And I think that max pain is approaching a level where it could well be to the upside. Anyway, look, we'll see how this plays out. But when I look across these supply dynamics, I kind of like it. So anyway, this tool, obviously, where this just excels, because as you can see, a lot of the bear market behavior, it's a lot more volatile, there's a lot more stuff going on, it's harder to read. But look at these bull market tops. These things are just textbook. So we are going to be so primed and ready when this bull market comes. The amount of tools we're going to have to try and spot these overheated conditions is going to be amazing. I actually can't wait for it. We're going to have to wait for it because that's the way markets work. But anyway, hopefully that's a useful session. I'll be revisiting these charts. And as I said, I'll put these particular ones into the newsletter so you can actually zoom in and have a poke around. I think they're really neat. I think they tell a lot of the story, and they're just kind of Bitcoin art as far as I'm concerned. Anyway, hopefully that was useful. See you in the next one. Cheers.